Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream where we bring you the leaders of the new bull market. So again, the goal with the next Super Stock program is to bring you those stocks which have 10x to 100x upside potential, companies going after massive multi-billion-dollar market opportunities at a key inflection point with multiple catalysts in place. But what makes the situation we're in right now even more interesting is that values have been crushed by the mega bear market over the last 2 years. Many of these stocks are down, 80%. I mean, the ARK indexes are down 80 to 90%. But the good news is that a new bull market always emerges from the despair, from the ashes of this type of destruction. And we're seeing it right now. And we're going to talk today about how NexTech is really positioned right at the epicenter of what's going to be the white hot mega trend that is going to be the new bull market. So Evan, we're going to start in just a sec, but I want to kind of give a setup for the audience so they understand exactly what is happening right now, and you can chime in here. But what I've seen, and I think everybody watching could agree, is every bull market begins with something that emerges as the hot new technology. Like in the 90s, we saw it was, Wintel, the Windows 95 Intel, which then led to the dot-com boom. But we started with the AOL, then the dot-com boom. That market collapsed. And the 2010 bull market, really what began in 2009, 2010, that was led by social media, Facebook, et cetera, et cetera. And companies harnessed. So in other words, the 90s was companies that harnessed, the Windows 95 boom, the dot-com. The 2010s was companies that harnessed social media, the network effects, whether it was, CRM, whether it was Salesforce, whether it was Twitter, Facebook, all these other guys. What we're seeing now is amazing. AI is clearly, really at the early stages of what's going to be a major mega trend, and the companies that are going to be benefiting most from the mega trend are those that harness the power of AI, and that's what we're going to talk about.
Yeah. I mean, you even saw like cloud computing has also been a mega trend, right? And you're right. In these bear markets, bull markets are born, and so that's historically what's happened over and over again. And technology has always been the game changer for the market. It's kind of the engine of growth. It's the thing that people get most excited about. Not so much about Coca-Cola or McDonald's, right? So from our perspective, if you look at what NexTech brings to this party and the next bull market, we bring 3D modeling. We bring really an array of technologies. Our human hologram, HoloX, is now starting to become a much bigger deal. Our 3D modeling business obviously has taken off with Amazon getting behind it and other big box retailers as well. And the thing that's allowing us to be positioned is AI. You touched on it. We don't really talk about it much, Jack.
That's today. I think let's focus on, because I think the AI aspect of NexTech has not been valued by the market. Here's the crazy thing, right? If we look at some of the hottest stocks, the companies which created the massive value in the last 2 decades, which 2 companies? Amazon, Netflix. What are those 2 companies? What was their competitive advantage? It was the AI, right? It was the AI, the recommendation engine.
AI is essentially reinventing everything online. Search engines, you see like Microsoft, their Bing is now, they're trying to acquire Chat GPT, which is owned by OpenAI. It's a $29 billion valuation. They're paying $10 billion for a 49% stake. It's going to reinvent photo and graphic editors like Photoshop. And if you look at Toggle 3D, it's all based on AI. It's all machine learning. Everything that we're doing is in alignment with the market. because we're micro cap, we don't get the same valuations as these big mega, tech companies. But that's really the value. That's really I guess the opportunity, at least in my mind, where if AI is game-changing technology, which we all believe it is, I mean, it's playing out in the market. There's new valuations. Jasper, which is another generative AI startup that was founded in 2021. That's only, it's 2 years, 3 years after NexTech. They just raised $125 million in October. They have $1.5 billion dollar valuation. Stability AI, which is just an image generating AI company founded in 2020, raised 101 million with $1 billion valuation. So you have smaller generative AI companies that are getting billion-dollar unicorn valuations. These are just startups. And then you have NexTech, which is using the AI to create products, to
So it's
create
actually,
value.
Evidence. What's really interesting is this, right? Like NextTech is really straddling two major mega trends, right? You have at the core of it, the core business of NextTech really is creating these 3D product models, these AR models for e-commerce, which is a $5 trillion market that's pivoting to this Web3 3D model world. And again, we've talked about before the benefits. Amazon, I mean, look, there's no better validation than Amazon giving you this, what is it? Is it a $5-7 million order? I mean, it's growing. You got other major blue chip e-commerce companies coming to you. So at the core of it, we have this boom in this 3D model, creating these 3D models. But what's giving NextTech kind of the competitive advantage is essentially, I think we've seen it before our own eyes, is really the proprietary AI technologies. Because originally, when we first started talking, like, it was almost 3 years ago. It took, I don't know how long it took you and how much it cost to create a 3D model. I mean, what was it? It was like,
it took us like a week or more to create a single 3D model, and we would, it cost us anywhere from $300 to $3,000. I mean, it was painstaking, right? And so, of course, you can't scale that. Now with AI, we have filed patents. We have patents that that are soon to be filed. It is game-changing technology that is allowing us to solve the multi-billion-dollar 3D model supply problem for e-commerce. It's a global problem. Nobody has been able to crack the code. We believe that we are solving that problem using, generative AI. We've talked about it in yesterday's press release, where we're essentially creating a parts-based library of 3D models. We're accelerating the development of that. We're past 100,000 3D model parts, but when we get to 1 million, 2 million 3D model parts, and it's growing exponentially because every single model we make has 3 to 6 parts. So one model equals 3 to 6. And if you keep on extrapolating out, Jack, what ends up happening is we essentially have every part made in our 3D library that can then be harvested by our AI and turned into a 3D model on demand. So think about it. We only need maybe 1 million, 2 million 3D parts to make pretty much every single model. I'm not talking about like super.
It's sort of like DNA. It's sort of like you have those are the building blocks. Essentially, NextTech will own the building blocks to creating every type of part for the
library. It's almost like having all the letters in the alphabet, and then you're able to compose an essay. It's like if you own the alphabet, then there's nothing you can't do, right? As far as so when it comes to 3D models, we're taking a different tact, a different approach, and so we think that within the next 12 months, we're going to have a moat around our 3D modeling business that will be essentially putting us in a position where we won't be able, no one's going to be able to challenge it. I'm not going to use the word monopoly because that's got a negative connotation.
But you're creating a massive distance because the more this is the beauty of AI. This is what makes these companies so valuable is that as the AI learns, it gets better and better and better, and it takes a long time for other companies to catch up because again, the AI takes a while for people to learn, for the machines to learn also, right? So you have this massive head start, and it gets bigger and bigger, and the distance gets wider. And then it creates this like real flywheel approach where it drives the whole growth of the business. And I think this is the exciting part about NexTech that, I think investors maybe are starting to kind of realize, but it hasn't quite clicked in the market that really the AI, this is a thing that really unleashes the exponential growth potential. Because look, 2 years ago, you had the technologies, it was great, but you weren't able to scale it. Now, the Amazon order, the $7 million order, is you're only able to do it because of the AI, which allows you to scale. And of course, the more you do it, the AI learns even better and becomes even more valuable.
Yeah, but the reality is, Jack, is that the Amazon order is the tip of the iceberg. It really is a drop in the bucket when you think about the amount of revenue that's going to be driven through NexTech's 3D model library. It's, in my view, massive, meaning we're just at the beginning of a multi-year run on 3D models where everything in VR, everything in AR, this whole metaverse that everybody's talking about, it's all about 3D. And we are going to be the company that people come to, and it's going to be automated, meaning I'm going to sit back and wake up in the morning, and by overnight, there'll be, I don't know, thousands of 3D models that will have been made used by our generative AI that's going into our parts factory. Once we get the 1 million, 2 million parts, the AI is going to create the models autonomously.
Right. Yeah.
You understand
this is the big thing. This is the generative AI. This is the generative AI. That's like ChatGPT, DALL-E, all those guys.
Yeah, this is AI. This is, look, it's a little scary because, it's like who's in charge, right? Who's controlling this? But the whole point is that the value of being able to create 3D models for e-com, let's be crystal clear. We're laser focused and targeting e-com. Think of Target, think of Walmart, think of Amazon. Think of all the products that you shop for online. Every one of those products is going to be turned into a 3D model. Every one of them. Right now, it's just a small fraction. It's like 0.5% of the products that are out there. And so if you think about that, and you think about NexTech having an AI machine that's able to go into its parts library and put together a 3D model autonomously. Toggle 3D is a piece of the workflow. So there's this whole assembly line that's automated. It's not a human assembly line. It's an AI assembly line that's literally automation at its creating 3D models at scale for e-com, and it's on demand. You just you just show the AI a photo of your product that you want made, and it goes to work. And some of the products can be made in seconds. If you're talking about something simple like a painting, a rug, or something like that, it could happen extremely fast. And some of the products might take a few minutes to be turned into 3D. But if you think about what I'm describing compared to where we were, again, a couple of years ago, this is that moment in time where NexTech really does start to accelerate in terms of its ability to generate revenue quarter after quarter after quarter. And I don't see it really ending, like, because there's new products being made every day, right? So even when we have this parts-based library, it doesn't really end, right? Because new products are coming to market every year. There's always a new couch or chair or new design of sneaker or clothing design. And so it just doesn't really end as long as people keep, buying stuff online. Our business is going to continue to grow, and I mean, it's just super exciting time, Jack.
Yeah, no. So the reality is this: it's kind of like the AI, being able to use this generative AI, and you've been doing. I mean, this has actually been at the core of NexTech from day one. It's just now it's becoming more and more important, and that's the thing that's really driving the company's competitive advantage. But that really kind of this really creates the inflection point, because again, now you're really able to scale these 3D models. And I think you mentioned that. How big is the market opportunity for what you're selling, which is 3D models, for e-commerce? Is it? I think you mentioned like it's like a billion or 100. Like what's some crazy number? Because the market overall e-commerce is 5 trillion, right? There's millions of SKUs. They only can have the 3D models. That's a major shift as they're going to those 3D models away from flat JPEGs. How big is this opportunity?
It's hard to quantify exactly, but we're estimating that it's in the $100 billion range. That's kind of what, if we were going to turn every product into a 3D model, let's say tomorrow, we would generate $100 billion in revenue. So that's a big number.
Now we're not making projections that the company is going to hit 100.
No,
but the total market, the addressable market is you're saying 100 billion for 3D product models.
For 3D models, yeah.
Okay.
And it could get even bigger because, if you think about animation, if you think about games, video games, and those games now have photorealistic 3D models. They're no longer just kind of cartoony 3D models. The video games are now actually starting to look at 3D models as part of their needs, what they need to create a realistic landscape for whatever video games that they're trying to sell. So, and then if you think of VR, 3D models are becoming much more prevalent in the world of VR. So, right now we're only talking about e-commerce, but there's more demand starting to creep into the market from VR and from gaming outfits that are looking for 3D models. So it really, again, we're focused on e-com because that's where we started. Remember, we used to have an e-com site, so we started with e-com, but we're starting to see now that there's more demand outside of e-com, and that's just kind of green pastures for us to grow in. We could continue to to grow our business even beyond e-com.
But here's the thing, right? So like we're talking all this stuff, and people are probably listening, and they're wondering, okay, well, it sounds great, whatever, but what's the proof? Like, I think at the end of the day, investors want to know, okay, is this for real? And I think the proof is.
Well, we're going to be
revenue growth.
Yeah, we're going to be pre-announcing our 2022 numbers. Could be as soon as this week.
Okay.
Could be next week.
What can we expect? What can we expect?
I would estimate that our year-over-year 3D modeling business grew by over 250%, which is not insignificant. And if you look at 2023, it looks to be another year of triple-digit growth. It could go from 250%. It's hard to predict, but you could see 250. You could see 500% growth. Obviously things have to fall into place. You need to, things have to go right. And as of today, everything is moving in the right direction, but you can't predict. It's hard to predict anyway what's going to happen 12 months from now. So from today's perspective, 2022 was a breakout year for our 3D business. 2023 is set up to be a record-breaking year for our 3D business, again, which is driven by the AI, and we just don't see it stopping, Jack.
What's really interesting is the numbers you mentioned is like, and people, oh, 250% growth. The reality is those are unicorn numbers. If you look at any of these like unicorn multi-billion dollar stocks, their growth rates, what gives them those valuations is they're addressing massive markets, but they're growing, those 300% numbers compounded over and over. And you have like 3-4 of those years back to back, and all of a sudden, this is what the market is going to be paying for. Now, it's not paying for today. The market is not paying. We're basically, this is, I think, right now, this really reminds me of like the early '90s when you had all the great companies, like what became huge with the dot-com boom. They were trading for nothing, because the stuff wasn't quite good. Even let's use the case of AOL. This sounds very quaint. AOL sounds very quaint, but if anybody remembers, that was the hottest stock of like the that was the epicenter, the white hot center of the dot-com boom. Now, I know personally a guy who made $50 million with AOL. He started, I think, with like 100 grand, like something like 50 or 100 grand, and he parlayed because the stock. The stock went on a massive run, right?
Yeah.
But it started in the mid '90s. It started like around '95, before the internet. As we know, they had the internet, but it really nobody was under. What was the inflection point? The inflection point for AOL.
Jack, I had an AOL account. Everybody had an AOL account. Right. There wasn't anybody that didn't. Today,
they're gone. But the thing is, the inflection point for AOL happened when all of a sudden everybody said, "Oh, the World Wide Web, the web." Before that, it was just like this mail thing, whatever. And now what we're seeing, the same thing is happening with the 3D model space. The inflection point, what's making it happen is being able to use this generative AI, and this is going to create, I think, the next generation of, this is going to be the next unicorns are emerging right now. This is I think what the opportunities for investors. It's exactly the same setup, very same.
Yeah, Google is heavily invested in AI. I think of Google as an AI company. If you think of Amazon, what broke them out was AI. Right, where you go onto the Amazon site and you would search for a product, and the AI would serve up products from your previous search. It would know what you're looking for. And I remember like the first time that happened, I was like, whoa, how does it know? And so when you think about AI combined with AR, you're talking about a very, very powerful technology set. And from my perspective, we're looking at not just growing our business organically, but I'm even looking at acquisitions that would accelerate our growth, so that instead of us doing everything in-house, we can acquire some companies that have some cool technology and some customers, and bolt that on to our existing business, and that's just rocket fuel for our growth. So, we're looking at not just growing everything in-house organically, which so like 2022 is almost like a reset year for us. It really was a reset year. We divested ourselves of our e-com business and pet supplement business. We changed auditors. We what else did we do in 2022?
There was a spin out. There was a spin
out.
Oh
yeah.
I would say 2022 was really like the early stage of the transformation. It's almost like a butterfly emerging from the cocoon. It was a caterpillar, and now but really now you're really set up to fly, because originally it was crawling. The caterpillar.
Are you the butterfly or the caterpillar, Jeff?
No, the next step was originally the caterpillar, and last year it was in the cocoon. It was developing all the stuff, and now it's able to fly. It's the AI. No, seriously, the generative AI is the ingredient that makes the butterfly fly now at this point. This is what no, really, like, how else would you have gotten the Amazon contract unless you were able to produce models at scale? You couldn't have done it 2 years ago. You can do it now.
Yeah.
because of the AI.
Right.
So it's like I don't know if NexTech is. I mean, it's almost like I don't know. It should be valued in is it because I think actually the opportunity for investors is really that they've been thinking of it as an AR company, and AR was kind of like it wasn't such a hot theme.
Yeah, just
We're
to add,
an AI company.
just to add some more context, like, Sequoia Capital, you've heard of those guys, right?
Yeah, sure. Best
Who are
VCs, huge VCs.
huge VCs, right? Like those are the guys that originally invested in Apple and
Yeah,
Google and Amazon. Like these guys are trend spotters. They
yeah.
get in early and they know, okay, they have publicly come out and said that generative AI, not even said they've written generative AI has the potential to generate trillions of dollars in economic value, and that they are basically saying, like you just said, that there's an element to this that feels like the early launch of the internet, and that is very, very powerful. And if you think about the analogy that you just said, like, the early days of the internet, you had the companies like AOL and things like that that just went parabolic. I do believe, I mean, there's no reason why that can't happen again with AI, 3D, AR. Apple's coming out with their computer vision glasses. And we're kind of positioning ourselves. We have ARway, like we just talked about, as a spin-out spatial computing platform. ARway is also using AI.
Evan, I think you froze up. Evan, your internet connection is. Let's see what's going on here. Okay, stand by. Stand by, stand by. We have to see what's going on here. I think Evan's internet went out. Okay, Evan, you're back.
What happened?
I don't know. Your internet went out. You were saying something. You froze it before
I
you.
think
Before
the AI was listening.
the AI was listening.
Was listening. It said, "You know what? I'm gonna just kick him out."
Yeah. So here, what's really look again. The big, I think the big idea is this. I think this is what I don't think investors really have woken up to this. No, it's clear that they haven't because look, we're at the early stage right now of the next bull market, and it's going to be driven by, generative AI. I mean, we're seeing this Chat GPT. I mean, this thing has gotten 1 million users in the first 30 days. 1 million users, which is more than anybody else in the history of I don't know whether it was Facebook, anybody ever.
Yeah.
And this is a game changer because it really is. I mean, like I've never seen anything as like a wow like this as maybe it was like the internet when I first saw the web. It was like, wow, I can see the potential. I can see this as like, and now this thing isn't. And again, the value is going to accrue to the companies. It's not so much AI. It's the company. It's like it's not like it's really the companies that harness the AI that to really drive their business to the to parabolic growth, like what Amazon did using for the recommendation engine, what Netflix has done, what we see others, and again, NexTech is using it for this particular 3D model thing. And again, I think essentially what you're going to have with this library, you're talking in this library of 3D parts, it's almost like an Adobe type of suite, which becomes extremely valuable. I mean, we saw Adobe paid, what is it, $40 billion with a B for Figma. Do they have a 3D product suite?
No, I don't actually think Adobe is the right. So think of it more like Getty Images, where It's like, you have, but it's not even that. It's, I actually think that we could license the tech out to all the big e-com players. So basically, I don't know, think about the
Oh,
top 50, right? And we just
yeah.
license it out. It's literally a platform that they pay a monthly fee to, and they just churn 3D models, and it just populates onto their website. That's kind of how I see it playing out, where instead of right now, we're signing up deals with Amazon or with, Target, Walmart, or whatever. Imagine this is just, hey, Target licenses it. They don't even talk to me. They just license our platform and pay us a monthly fee, and off they go. That's, I think, the future of AR-tize
Okay.
3D.
Okay. Like basically like what Getty Images does and what like
Yeah, yeah,
Canva or
yeah,
any of these
exactly.
guys.
Exactly. It's just the licensing. Once we have the scale with the number of 3D model parts
Hmm.
that are needed to supply everybody, it's kind of game over. Literally game over. There's
Hmm.
nothing. It'll be like everybody else. All of our competitors will essentially just go out of business because they're focused on delivering a single 3D model. But if you think about an entire parts factory, a library that's able to generate 3D models on demand, and then licensing that to all the top e-com sites, even Alibaba would want something like that. Even, all the manufacturers are going to want to license our Toggle 3D. So from my perspective, our business model is going to shift as we get deeper and deeper into the market, as we become the de facto standard platform.
Hmm.
And, just to be clear, like we keep talking about AI and 3D models, that's not the whole picture. There's a high standard, a very high standard that you need to meet as a 3D model supplier to the Amazon platform. Everything, if you look at the products that Amazon's showcasing in 3D on their site, in their app, it's photorealistic. These models look legit. They look extremely real. The number of pixels are very high. And so to get to that kind of photorealism is not easy. Like, there are other companies that make 3D models, but again, to be able to supply Amazon, to be a preferred 3D model supplier, you have to be at the top of the game. It's kind of like a pro basketball, football player
Hmm.
versus like AAA. It's not the same. It is not the same. So we're the pro baller with 3 models supplying Amazon and others. And the idea is that when you get to that level and you're able to supply them a platform that they can license, that is everybody's dream. That's their dream. They don't want to like give us purchase orders, piecemeal. They just want to be able to buy as many 3D models as they possibly need. And for Amazon, who's going to be opening up their entire platform, Seller Central, you're talking millions of merchants that are going to be looking for 3D model suppliers. It makes total sense for us to just license to an Amazon the entire platform and say, hey, you could offer this to your entire ecosystem, and the model making it's just done autonomously, and Amazon just pays us again like a monthly.
Okay.
Amazon's paying us, Walmart, Target. That's the goal. We want to own this entire market. Toggle 3D. So that's the distribution side of the market.
Hmm.
That's where you and I go to buy products. Okay. But then you have Toggle 3D. What does that represent? That represents the manufacturers, the CAD market. Same business model. We give them Toggle 3D. They pay us a monthly subscription. They're able to use that as a collaborative platform for prototyping and creating 3D models at scale, but these are custom 3D models. This is where the actual products are being made, not distributed, right? The distribution comes further down the food chain. So we're going to have that end-to-end solution. Toggle 3D is for manufacturers. ARitize 3D is really for the e-com distributors. And then you're going to navigate your way around with ARway.
Okay. So, but what's really interesting is, okay, so what you just kind of what you just laid out is the idea of once you have this library that Amazon and everybody else licenses. I mean, you're moving towards that basically. Now, again, the generative AI allows you to do this stuff at scale. So we're moving closer to that point. I think that's kind of like the breakout point, because look, once you have that library, like you said, it's like kind of game over.
Yeah.
Because essentially that's the monopoly on 3D product images for e-commerce. That's it. So I mean, at that point, what's the valuation? Like, what is that business worth? I mean, like, I think that's what we should, investors need to look at. Is it I don't know, is it 1 billion, and what's the valuation when you have you own that market? Because again, I'm using the industry comps, right? Like, I'm not making
Jack, if we're saying that 100 billion is the market size, why are we talking about a single billion?
Right. Okay, no, I'm using the example of, like,
if we're able to corner the market, I mean, look, we're not going to get 100 billion, but the idea is that somebody who is a bigger player would look at it and say, like, okay, we could generate 100 billion in revenue or what have you off of the back of this 3D parts library over a period of years. And so how much is that worth today? So they would do a discount.
Also, the other thing is there's also, you have to look at, why did Adobe buy that Figma company, right? Because they saw it as a disruptive technology which could disrupt their business. So somebody out there might be looking and saying, wow, if NexTech as they get closest, that could disrupt their business. So they
I don't think so. No, I don't think so. So I don't think we're going to disrupt anybody, because there's no 800-pound gorilla. There is no dominant player today in the space. So who are we disrupting?
Okay, right.
Nope. We're not.
Okay, yeah.
Right. So
again, I always go back to Adobe, but maybe it's I'm using
Adobe and Toggle 3D will go head to head, but ARitize 3D, the 3D model making, no.
Okay. No, very interesting. Okay, so let's get to some audience questions. We got a bunch of audience questions here. Okay. Spinouts. We got a lot of questions about the spinouts. We should recap where we were with the spinouts. So ARway was spun out. That's trading. We have some questions about AR. Then we have also Toggle 3D is up next.
Yeah. So Toggle 3D is very, very interesting. I'm thinking in 2023, we're going to have probably 2 spinouts, possibly 3, although that would be a stretch. But we know there's one with Toggle 3D that we've announced, and so that is moving forward. It will likely be a carbon copy of ARway in terms of the structure of the deal. The difference is that for investors that are looking to get into Toggle 3D, you can email me. You got to be at least a 12-month hold kind of player. This isn't about buying and flipping. And you got to, be able to put in at least 25 or 50,000, preferably even 100K into that deal. So, no $5,000 investors are going to be in that deal. So the idea is I'm going to be the biggest shareholder. I'm going to, write a 6-figure. I think there's 10 to 100x upside in Toggle 3D. NexTech is going to be a customer. We'll probably have a licensing deal so that we can use the Toggle 3D technology indefinitely, because it is something that's going to be of value to us. But we want to open it up to everybody so that everybody that that wants to license the platform can and will. It's roughly a 90-day sprint to get Toggle 3D public. It's going to be a direct listing on the CSE, and we're getting a lot of interest. Yeah.
Let's get to
It's going to be just one last thing on Toggle 3D. It's going to be tiny in terms of the amount of capital we're raising. 1 to 2 million. It's we don't need a ton of money. So
yeah, but you're gonna one of the interesting things again. There's going to be there's really like two big hot themes. We're going to see AR becoming a hot theme as Apple launches the AR glasses. We already know that, right? AI though is going to be that's going to be the thing.
It's already taken off.
It's already
AI,
right? And essentially NexTech with these spinouts is creating it's almost like an ETF, a universe, an ecosystem of companies, pure plays in those spaces. So it's very interesting.
Yeah. So people that think like, well, we're only given a 4% stock dividend. That's not actually accurate. Let's be crystal clear. We're dividending out 20% of the shares of the spinout. That's a big dividend on, and NexTech's keeping roughly 50%. And then, we're raising some capital from new investors, but 20% of the shares are being dividended out. And so that's a lot. And if you think about, again, holding these shares for the long term, these companies could turn into unicorns, and if they do, those shares, that 20% of $1 billion is $200 million in value that could be unlocked through these spinouts. And so, that's the idea, is that we want to create value for our NexTech shareholders. We want these companies to be standalone public companies. Obviously, it worked with ARway. There was people that were nervous, people thinking NexTech's going to go down and this and that, but none of that happened. The only thing that happened is that we created value for our shareholders, and I think the same thing is going to happen with Toggle 3D.
Yeah, we get a lot of questions. People. Yeah, it's so. One of the questions here is this is great. Can you explain for only 4% dividend on this? Actually,
yeah. Again, it's not.
If you think of the annualized yield, it's an incredible yield what NexTech has paid out, and this person, it's.
Yeah. So think of it like this, Carmen. We are dividending 20% of the shares of the spinout company. If, let's say, we went to 8%, for NexTech, that would be 40% of the shares. If we went to 10%, that would be 50% of the shares. And so it's like, we're giving a substantial chunk of the upside of, free trading stock to our NexTech shareholders, and we're also retaining 50% ownership, so that the people that own NexTech, you really end up with 70%, right? 50% in NexTech proper, and then you get a 20% dividend. That's 70%. 70% still controlled by NexTech shareholders.
Yeah, and actually, what's the math on the yield? In other words, NexTech technically it's almost a dividend stock because of the yield that's been generated from the.
Yeah, if you think of look, if you had,
and now you have Toggle coming up.
Yeah, you had $10,000 invested in NexTech before the spin out. You got a $400. That's 4%, right? $400 worth of stock in ARway. ARway at one point went up 10x, so that would have been worth $4,000. Today it's up, I think, about 5x, so that's worth $2,000. 2,000 is a 20 on 10 is a 20% dividend.
And,
That's just for warm-ups, meaning if you get that again with Toggle 3D, that's a 40% dividend. And then if you get it again, that's a 60% dividend. If you get it again, that's an 80%. If I do 3 or 4 spinouts, you might get 60 to 80% return on your money with NexTech flatlining. Now, God forbid NexTech starts to run, which I think it will, obviously, because we're talking about all the reasons why NexTech is primed to run. Now, all of a sudden, it just becomes a bonanza, which is why I own the largest stake in NexTech. I want it to be a bonanza. I own the largest stake in ARway. I'm going to own the largest stake in Toggle 3D and in all our spinouts. Why? Bonanza.
no, so here, so the whole idea, I think, again, investors need to understand is the great thing I think about NexTech that people don't quite appreciate yet is that, the focus has always been on, creating value, and you're doing it right now. In other words, like, the spinouts, and that was the first spinout. There was going to be more spinouts. The idea is, at the end of the day, the goal is, it's a twofold goal, is to unleash exponential revenue growth, again, using like chat, whether using the generative AI, using those technologies, which are now happening. That's happening now. And then on top of that, stacked on top of that, unleashing the shareholder value, which is spinouts, which create further value. So it's almost like it's almost like a bullet train. It's a bullet train, and then you have the Lamborghini, driving on top of the bullet train. So the bullet train is going, 200 miles an hour, and the Lambo is going 200. So it's like an incredible.
Like 3 Lambos on top of the bullet train. Not even one.
So by the way, here's the thing which I don't think you didn't explain is that the spinout with the 4%, 20%. That's an absolute number. That's not even annualized. If it's annualized, it would be like a 40 to 200% annual return.
Yeah,
it's a crazy number. If you, that's how a hedge fund would say, hey, we're generating annualized returns of 200% or whatever the number is. I mean, that's really what you've been generating.
Yeah, I think annualized.
APR.
Look, investors should be thinking about the big picture, not focused on why am I getting so little. That's small thinking. Think bigger. These are big opportunities. These spinouts allow, hey, if you don't think you own enough shares in ARway, go buy some. It's public.
This is the problem. You give out a gift and people, they don't.
It's like, okay, you want to own more? Go buy some.
Yeah.
So
okay. Question: how many spinoffs are you anticipating for NexTech this year?
Well, Assad, I think we've announced that we're going to spin out Toggle 3D. That's 1, and so the idea is we'll probably do another 1. So it could be 2, and there's a small probability of 3. But I would say over the next 18 months, there's a high probability of 3 or potentially even 4. There's also some acquisition targets, as I mentioned earlier, that we're looking at. There's also some new technology that we're developing that could be an additional future spin-out. We're not done. This is just, look, we proved our point with ARway. We proved our point, which is we're able to unlock value through these spinouts. Before we did the spinout, it was a lot of chatter, a lot of talk, a lot of potential, but now it's in the rear view. Ring the register. ARway was a super successful spinout. It has a valuation that's north of $30 million today. And when it was inside NexTech, it was worth 0. So if we extrapolate out, second spin out, another 30 million, third spin out, maybe another 30 million. And also, let's be clear, this is the first.
Actually, ARway increased 10x. It increased 10x from the spin out.
It did.
In like 10 days, which is investors don't give. I think we're getting questioned on this. Oh, why are we only getting 4%? I mean, who else is giving? What other tech stock is giving you? What other penny stock? What other micro cap in Canada is giving any dividends? It's unheard. It's unheard of. And the crazy thing is, this company has created shareholder value from day one. Investors need to keep the perspective. NexTech itself was a spin out. The stock. I mean,
Jack just froze. First I froze, now Jack froze. And I have no idea if I'm actually still here and you're watching me, or
okay, yeah. Can you hear me?
There you go. Yeah,
okay,
you're back.
Okay. It's internet. Okay. Okay. So we're saying, look, the company has created value from day one. You went public. If somebody, I think it was 2018 as a spin out originally, right?
Yes. Yeah.
So I think it was 20 cents. What's the number?
25 cents. Look, every single deal is a carbon copy. We went public at 25 cents. The stock went to $10. ARway went public at 25 cents. The stock so far has gone as high as, I think, 250, but it's still not fully developed. Meaning, I think ARway can easily be a $10 stock. Toggle 3D is going to go public at what price, Jack? 25 cents. And guess what? Probably going to be another TenBagger. Who knows?
Yeah, this is like a stealth. Look, NexTech in reality, this is like the best. I think this is the best kept secret in the market. It's like a stealth bull market of its own. Because if you think about it, if you look at what's happening with the Canadian stocks, microcap stocks in the last, let's call it 5 years,
got destroyed.
Yeah, but no, they're all down from where NexTech actually is up 300% from the essentially let's call it the IPO, right? And it had a run to almost what is that to $10? That's a 40x, 4,000%. Okay, so went to 4,000. Now it's 300. But this is like essentially it's a long-term play. Now the value created from the spin up. By the way, my friend who made like 50 million with AOL, the money was because the company kept splitting and splitting. I think they also had a dividend. So it wasn't like those splits. Then he bought more. That's how the money is made. It's not like, hey, you buy the stock on a Monday, you sell it on a Wednesday, you make a quick double. No, it's by holding it for. I think he held it like 5 to 7 years. It's a long-term play. The value ultimately NexTech is going to be created from the cumulative return of all the dividend spinouts, everything else, and who knows what other technologies you're going to acquire, develop, spin out. It's ultimately it's a value creation machine, which has been your core competency from day one. I mean, so it's like this is what people need to understand. It's amazing. It's a free gift they're getting with the stock right here.
Yeah.
More questions. Here's a great. Okay, what is the reason for doing? Doesn't it reduce the value? Can you address this one last time? Should we address this?
Sue, one last time, Sue. We're unlocking the value. There's value that gets zero valuation. It doesn't reduce the value of NexTech by losing some of its technology. No. 2 reasons why. One is we license the technology, so we still have access to that tech that we created. So it's not like we don't own the tech, we can't ever use the tech, we can. Number 2 is we still own 50% of the upside. We still own 50% of the shares of the spinout. So, I mean, we get the best of both worlds. We get to dividend out shares to our shareholders. We get to create value where inside NexTech, there was zero value for ARway. ARway was not getting any valuation. NexTech did not go down. ARway go up by $50 million. That didn't happen. And so if you look at these spinouts, we will be able to continue to create value for our shareholders, unlock the value that's trapped inside of NexTech in these technologies and businesses. So it's actually the opposite of reducing NexTech's value. We're increasing our value. If you look at ARway, we own $16 million worth of stock in AR.
And the stock is up from where you first announced. NexTech is higher today from when you first announced.
Yeah. I mean, we own $16 million worth of AR waste. So is that worth something to NexTech? I think it is. Before the spin out, we had zero.
Evan, a really interesting question. So generative AI, will generative AI disrupt NexTech? Will create ARway maps on demand, 3D models? If Google is in code red, what about you?
No, we're not in code red at all. We're using the generative AI to create 3D models at scale with our parts-based library. Nobody else is doing that. Nobody else can do that. And as far as the maps for ARway, it's not actually using that kind of AI to create the maps. So it's different technologies. We're not threatened. In fact, we're stronger because we're now using AI to help us scale our business.
Interesting question. So will NexTech retain the patents and IP, or will spin-offs own the tech?
When we spin these companies out, they're going to own the patents, they're going to own the IP. But remember, we control 50%. So we will still retain a massive ownership stake. And so that, that's really the bottom line.
Okay, so yeah, I actually I have there's a video. I was Keith. I was
Jack was at CES because Jack actually lives right down the block from CES, so he just walked over there and went in. Yeah. So
yeah,
Keith,
we shot a video. I mean, it's 100% right. I mean, if that's a massive, there's a video I think on Twitter. The show.
So our event platform, our NexTech Event Solutions platform, is going to be launching the ARway wayfinding in the Map Dynamics app, which is being integrated, and so that's all happening now. So all these events that you're going to are going to have the ARway wayfinding. That's going to happen in 2023. Yes.
Okay. Interesting question from Deal Share is ARway.
So yeah, so we have they not unless they're integrated with the glasses. It doesn't just happen. We have to actually integrate. So if you think about Apple launching their computer glasses, we are in the Apple App Store. Samsung launches a pair of glasses, will be App Store with the Google apps, and so. If the glasses come out with the Apple App Store, you'll be able to use our tech in the Apple glasses. But a lot of this is just early days, so we're going to be integrating with a number of glass companies so that you will be able to use the ARway maps and see the 3D models in a multitude of glasses, not just the Apple glasses. Think of HoloLens and Magic Leap.
Okay. Filters, triangle. Okay.
Yeah, we are working on filters so that people could try on. Yeah.
Okay. Can you elaborate how? Okay. So Okay. So I think you kind of touched on it. One last. So the AI patent that you just announced yesterday. Competitive advantage in a nutshell.
Well, the AI is allowing us to scale by using this parts-based library. The AI is able to go in using computer vision and generative AI to create more and more value. More, I mean, if you look at our patent application, we've actually filed, and you can see the number online, and you could read it if you want, but. It's a competitive advantage because it keeps our competitors out of the market.
Okay? So I think some people are asking: is there a research report that said that the deals with Target and Walmart are signed?
So I would just say that unless NexTech proper puts out a press release, everything is just, rumors, right? We have to be the ones to put out the news. You can't have a third party put out news. So unless we're putting it out, I would not take it to the bank.
Okay, interesting question here. So why is it the market value? Why are you spinning out these? Why are you doing these spins at such low valuations to start? If these are, unicorn potential.
So you tell me what it's worth, Dolly. What's it worth?
Buy the open market. Right to the
these are private enterprises that we are valuing based on hiring a third-party independent business evaluator, and they're pre-revenue, right? So these are commercialized businesses that have not generated revenue, but their product is ready to be sold. So how much do you what value do you want to put on them? I mean, how do you value it? How do you value it? I'm saying they're worth $1 billion. They're not worth $1 billion today. They're only worth $1 billion as they scale and generate revenue, which is not happened yet. So you can't value it today based on the potential of the $1 billion in revenue, right? Or the $1 billion. So, you could buy the spinoff. Like I said, if you send me an email, if you're a long-term holder, and you could put in some, capital, we will, yeah. So you can email me. My email is evan@nextechar.com, and we'll put you on the list. But it's going to be a small list, and we're primarily looking for larger investors that, again, are not looking to sell for at least 12 months.
I mean, this would be for what? Accredited investors mostly.
Yeah, credit investors, right? So
it's a private placement essentially that they're buying.
Exactly.
Yeah.
Exactly.
And in theory, I mean, we're not making solicitation, whatever. I mean, in theory, somebody buying private placement, there's always a risk, right? It's like, hey, it's
100% high risk, high reward.
Right. Not for widows and orphans, right? This is like the stock itself is not. I mean, we're not here to. These are these emerging growth stocks is basically public venture capital. So
yeah.
I think people need to understand that with anything here.
Exactly.
Okay. Interesting comment. So with a parts library generator, this is looking very similar to ChatGPT. So essentially, NexTech is like the ChatGPT of 3D models.
That's kind of what we're saying. Yeah, is that we're creating that. And that's actually why I think NexTech is so undervalued right now, is because people just look at the surface level. That's it. They look at surface level information, but when you start to peel back the layers of the onion in NexTech, not only do we have generative AI that can create 3D models at scale, but we also have a 50% stake in ARway, worth $16 million today, Toggle 3D, another spinout, and more spinouts coming, and they're all in the sweet spot. They're all in this 3D AI market. You have a CEO who relentlessly is going out there and telling the story over and over again to try and
even in a bad market. This is really what separates NexTech from the whole entire microcap. I'm not even microcap, like the growth space in general. Most of these companies, whether it's Nasdaq, small caps, or companies in the CSE, TSX, whatever. Yeah, they've all been in hiding. They're not returning phone calls in the last 6 months. I mean, how many companies do you see, engaging with investors? So I think again, this bodes very well. Again, these bear markets, they bring clarity. It's now you can actually see who the real, which are the real companies, which are the real players here.
And I noticed, it's interesting, Jack. Like there's a potential short squeeze brewing as well. So, like NexTech's in the past, there were people that shorted the stock that only had to cover at much, much higher levels. I think something like that is brewing again. So I think there's the potential to see some interesting action in the stock.
No, I mean the charts definitely look like there's like a real setup for it to kind of break out here. So that's
Yeah,
definitely
I'm kind of surprised, where the share price is. It just kind of drifted out lower towards the end of the year.
yeah. Um, so okay, Evan. On that note, let's kind of wrap up here. I think it's important really to focus on kind of the big long-term vision because a lot we haven't really addressed this in a while. But look, the reality is people are very focused on these like near-term things, next week's news, this contract, that
Right.
contract. But overall, the over the whole arc of the NexTech, I mean, the company again, the stock is up 300% in the last couple of years from its time from the time it went public, 4,000% at the peak. But still, if you bought at that thing, you would have gotten 300%. It's up. It's tripled since the June low. Um, Long term, what do you see? Like, what is this company going to look like? Let's just say 3 years from now, because again, I really believe that we're at the start right now, whether it's now or the next bull market, which is going to be driven by AI. I don't know if
Yeah.
that bull market's going to start. It's already started, or it's going to start in 2 months, 3 months, whatever it is. There's no question that it's going to be driven by AI.
Yeah.
And again, we've seen these markets; they go higher than the last one because everything with AI, all of a sudden everything becomes exponential. I
Yeah.
mean, it's
Well,
just
AI really is exponential. AI changes the game. AI never gets tired, never sleeps, doesn't eat any food. It's not like us humans, and doesn't get depressed. Doesn't go through all the
doesn't ask
trials and
for a raise.
tribulations, the ups and downs.
Right.
And so AI is going to create trillions and trillions of dollars in value. I'm totally aligned with Sequoia that AI is going to change the game. It's already being used, by the way. If you look at the black box and hedge funds and the trading in the market, it's all driven by AI. And so, that's like, financial mathematical algorithms. But now it's being unleashed into our world, the real world, where the metaverse is going to be using AI. Machine learning is going to be standardized in our lives, and NexTech really is waving the flag. We're at the forefront between Toggle 3D, which is an AI-based 3D design studio, ARway, which is an AI-based wayfinding, really spatial computing platform, NexTech, which is an AI-based 3D model factory. All those three businesses combined, Jack, I believe each one of them could be worth many, many billions of dollars in market cap over the coming years. I don't think it's unreasonable. I think it's just a question of execution, execution, execution. We have to execute now. The technology's there. I do think the winds of change are blowing, where the bear market in 2022 essentially probably ended in Q4. And the reason why is because everybody got extremely negative. People were thinking Europe's going into a recession, the US is going into a recession, China is going into a recession, for all these different reasons. Interest rates were just, running wild. And so all that happened. You even had FTX collapse, which was a big deal. But guess what? The market now looks like it's turning. And if the market can turn in the face of that kind of negativity, it does kind of set the stage for a bull market. I've also been feeling kind of exhausted from all the negative news over the past 12 months, which
That usually indicates the bottom, right?
that's usually the bottom. If I'm
Right?
feeling
Yeah.
yeah, exhausted, right?
Yeah,
So
investors are all like really like
so
disgusted with
so when
everything.
the market gets its mojo back, I do believe that NexTech and all of our stocks that we spin out are in the right market sector, the right place, right time. And again, the revenue, the execution, all that is going to happen. Stay tuned for our 2022 numbers, which are coming out quite soon. The prelim numbers, anyway, and then off to the races in 2023.
Okay, Evan, on that note, thank you. And we'll look forward to getting a follow-up from you in the next couple of weeks. Thank you, everybody, for joining our live stream. And
Yep.
see you in the next one.
Thanks, Jack.